This is the stock market short-term view, and you can get our daily snapshot by becoming a level 1 member. You're going to get full analysis on the S&P 500, NASDAQ, Russell, all of our cycle analysis, projections, askSlim studies, and so much more about all of the momentum conditions in these indexes. You can get that just by becoming a level 1 member. Level 2 members, you're going to actually get our live chart streams for the S&P 500, NASDAQ, and Russell on the very short term. It's amazing on that SIR chart stream, and you'll get the S&P 500 live chart stream also with all of our analysis on there for level 2. So just fantastic. First time member, write to Matt at askSlim.com. I'm going to show you now this short-term analysis on the stock market. Let's start out first by looking at, well, pretty blank chart here of the S&P 500. And what I want you to see is there's some of our indicators on here that are extremely important to our analysis. And then I'm going to bring in the cycle analysis, which I think you will just, if you're a first-time viewer, you're going to find it, well, just amazingly interesting. So what we have on this chart is our 89-day simple moving average, which I use instead of a 50 or 200. The slim ribbon, which is this right in here, which is a 3 moving average ribbon, and that has coding in there that colors the bars. It also colors volume bars if there was volume on here, and it tells you when the configuration of the ribbon is such that there's a likelihood of continued momentum in a specific direction. In this case, you see that red. Here, the slim ribbon PO, it gives you indications of, first of all, it's red and it shows you negative conditions, and then these arrows in here show you momentum resumption conditions, when it is likely that it will move down again in that direction. You can see that right over here, right in this point right here, and it's about to give an upside signal right there. As it is a turning up, but it's not really in there yet. But we are anticipating that that will give you an up green arrow fairly soon. So what I want to do now is I want to change this. I want to bring in our analysis that is cycle analysis. And I'm going to switch over to our daily chart and bring in our cycle analysis. And all of a sudden, this just pops out with all of our artistic work on here. Cycle analysis is that. It's an art form where you look at the energies in the market. On the bottom are the cycle brackets here, which essentially show you the energetic movement were it to be ideal and completely consistent, like an oscilloscope where it actually moves up and down in a consistent way, or a heartbeat, like the heartbeat of the market. So what we do is get these energies, and we see resonance in the market as it continues to follow these patterns. Now on the top, these lines are how each cycle actually resolves itself, and the shape or configuration of those gives us important messaging. You can see right in here, and I'm just going to blow this up, there are areas where there are these yellow ovals, and that is where the energetics are such that you have a cycle that is in its final phase and in a correction phase, and usually joining up with some smaller cycle brings you the biggest downside, as you had here, here, and here, as you get to the end of those cycles. Note right over here where it didn't fall very far, and the messaging from that, as this configures very bullishly, is that there's a lot of buying. And you can see the slim ribbon positive, and that set up that next upside impulse that came in there. That was just great. You see in here it turned down, rallied, and failed from these resistances, and then set up that correction right over here. Now, this low right over here, slightly lower than this low, said that the next rally would likely fail. It did that, left this abandoned baby right in these sell zones, and then once it topped and broke this level right here, it set it up for a decline right through the bottom of the cycle, as you see right over here. So that is cycle analysis at its very basics. And of course, there are many nuances to it. And the cycle workshop that I have announced, that special great deal, and if you didn't see it, please go back and watch that, and you will see what we're offering. It really teaches you how to do this style of analysis. So here we are right now. And of course, coming up an important election week, and there is election day. And there are these little minor cycles that you see in there, 8, 9, 9 days, like that. And there's another one of those due right out over here. Now, it's pretty likely that this minor cycle right in here is going to line up with the corrective phase right in here and then give you this period of risk, this yellow oval, for another decline. However, we do believe that the intermediate or weekly patterns have turned positive, and that's why we've given more bullish intermediate projections. And this big engulfing pattern right over here is typical of what you get at a significant bottom. So what we're looking for is some pretty choppy action in here. Of course, here's election day, and I made comments in the beginning of the show about what I think about what would happen on the election, and basically what I said was that gridlock will probably be a positive thing, and that is the highest probability. So we're guessing that this minor cycle will bring you some rally out over here, some correction out over here, and then further rally. And you can see that we're really looking at what we think is a pretty choppy period in here, where you could very well get a range between 3650 and 4000 on the S&P 500, coming way out into, well, this is mid-January, we may potentially way out into sometime, this is mid-December, potentially out into mid-January. So for the next week, we'd look for week and a half, some pretty choppy action in here. As the election comes, it gives you another pop in here. Again, the highest probability, but always a tough call. And then some more choppy action out over here. Really looks like the area between this 50% and 61.8, that's around 3,700, and this is around 3,650, would really be the buy area in here. And then getting up close to that high over here, sometime between, with some in the area of 3850, 39, would really be a sell area just for this little short-term pullback here. And again, a move out to 4,000 is pretty likely. There's a 78.6% right over here, which comes right at around 4,000, 39.90, which is why we're projecting right out to that level. Choppy action in here. I'd say the highest probability would be positive action after the election and then coming down into this period here. But overall, an uptrend that we see is developing in here, and it is an intermediate uptrend that should last quite a number of weeks. I would say 5 to 7 weeks. Now, were we to start to get under 3650 or 78.6% that's not in here, around 3570, that would be some warning. And of course, under this level of 3491 would be terrible, and that would set up very significant declines going out into the March time frame, where we think the ultimate bear market low is probably coming. So right now, that's a low probability, and the highest probability is this choppy upward trend in here we see out towards the 4,000 area, out into mid-December, and then into sometime in January again. Choppy action. So let's take a look at this is the S&P 500. Let's switch this over to the NASDAQ, because the NASDAQ is very different. And what I spoke about earlier in the show is the changing of the guard. And that is happening in here, and quite visible as you see that while the S&P 500 is well above this 78.6 level here, this has already touched it. And it's possible that the S&P 500 will not, or likely it won't break this low, but it is possible that you will see what happens is that the NASDAQ actually does try to get down and test that low. So I'm just grabbing this right over here and bringing it down to this low right over here. And if it gets underneath that level, as you see, that would be somewhere around that, 10,000 10,400 and change, actually it's 10,440, then that would be setting up a very negative condition. Having gotten down to the 78.6%, it already suggests that this next rally will not make a higher high and then come down again. The question is, can it save itself in here and not get a breakdown? And get underneath that 10,440 level that is so important in here. NASDAQ much weaker. I'll show you that as we look at our market monitor. So, I mean, if you wanted to trade the market to the long side, it sure doesn't make sense to pick the weakest index, and that would be the NASDAQ right now. Here is our market monitor, which shows our proprietary information in here, and I'm going to share that with you. It goes from this side, which is the reversal scout, which is the most sensitive to the market, to the slim ribbon, to the option bias indicator, to the askSlim market condition indicator. This indicator has got the longest term variables built in there, and you can see in here that it runs from plus 100 to minus 100, and there's something called the swing zone when it's in the minus 25 to plus 25 area. Nothing has moved above that plus 25, so there's nothing positive in here yet, and that's why it's orange and red. But look at the NASDAQ, minus 92, compared to looking at the S&P 500 or the Russell or the Dow, which is plus 10. The NASDAQ is terrible. Actually, it's moved to neutral, where all of the other indexes have moved to green on the option bias indicator. That's what you use to decide whether or not you want to be long or short in your option positions, and it really helps you. This is the slim ribbon, which is right on this page right over here, and you can see still negative here on the QQQ as it is in the reversal scout. So there are much more positive conditions in here than we showed weeks ago when the market was in very bad shape, and this is just so helpful for you to be able to really understand the conditions of the market. You can see in here I also put in the FEZ, which is the top weights in Europe. That's really the stocks 50, and you can see that it's pretty positive when you look right over there. So all of these looking good except for the NASDAQ for the short term. And intermediate term, well, still very questionable, as those are still red or orange, and they need a lot of work for the longer term to turn better. So short term, it does look a lot better. So that is the NASDAQ, a lot weaker. Now I want to switch over to important analysis on the dollar. I recently did a big picture analysis on the dollar and talked about that there's an important time frame here where it was likely to turn to the downside. Now, when we got the Fed news that came out that was telling us that they're pretty hawkish still, the dollar had a big rally. But here is that cycle analysis on the dollar, and I've contended it was making the top and likely to get a move down into the 107s and 106s. I'm going to show you that right in here. You can see again the cycle analysis. It is beautiful. Here are the cycles that are the cycle brackets, which are the ideal, and then how they resolve is actually up here. And you can see there's a minor half cycle and a dominant full cycle that makes up the harmonic family in here. And what this shows you is where these corrective periods are here and here, as both cycles are coming down, and here. Now what's important about this is that we are in a period where the dollar and stocks are moving inverse to each other. It's not historically accurate, but right now that's what we have, so that's what we're looking at. And the main reason for that is because the stronger dollar kills the internationals here and really hurts their earnings. It puts huge headwinds into it, and so the stock market responds. Now look at this big reversal in here. Now at its lows it was one of the biggest, or the biggest down day of the year. It's coming back a little bit right now. It's bounced off of that, but we are coming into the period of risk for the dollar. Now you can also see what's formed in here is a head and shoulders top. This cycle right over here made the left shoulder and then the head right over here, and this minor cycle in here has made the right shoulder, And Head and Shoulders patterns are formed because of cycles, because the energy changes. And you can see in here that this minor cycle already turned down. That means this bigger dominant cycle is already declining. It got up here into this pretty high sell zone right over there, but then reversed beautifully. And that sets up this decline. Support here on this fib extension at around 107.37. This 61.8% extension is down around 106.35. Those are very reasonable downside targets. And if this comes as we expect, and that ends in early December, syncing with the weekly analysis, our target is 107.40, 106.35 right in here. This is going to help the stock market coming down because it will give relief to those international companies that are under such pressure. So that is likely what's going to happen, and it probably means that interest rates are going to be coming down or the bond market rallying during this same period. All of that will be supportive to stocks. And that's why I wanted to show you this right now, because I think ultimately it is incredibly important to this analysis on the stock market. So I showed you the short-term patterns are setting up for a rally to continue into December and probably into January, that our indicators have turned much more positive, looking at those proprietary indicators in the market monitor, which you can have if you become a level 4 member and open up a thinkorswim account. Then you'll be able to run the market monitor, and you will also see that, as I showed the analysis on the dollar, it's pretty likely the dollar is going to continue down and lend support to the market, the stock market. Even though that is not historically what happens, that is what's happening right now. A lot of people will write to me and tell me, well, that's not true about the dollar. Well, it's true right now, and we're looking at short-term analysis. Announcing the pre-Black Friday askSlim Workshop Special. This includes our cycle analysis workshop and a bonus workshop, and we've never done this before, as it includes the 5 essential building blocks to successful trading. I'm going to show you all of this, and it's going to come to you at a huge 44% discount. Each of these workshops are just filled with information. For the cycle analysis workshop, you'll learn Slim's method of analysis, developed over 48 years. It took 2 years to write this and over 6 months to produce. There are 22 video modules, plus many tools for text videos that are linked in there that are associated with the analysis. Just an unbelievable amount of learning. This is online lifetime access. You don't need any special platform. You'll never look at charts the same way as before. To improve your directional decisions, project in time and price. And we're going to support you as coming in early 23. We're going to hold a live event for workshop members, and we'll be able to answer all of your questions as you develop this style of analysis. And Matt has a demo reel, and you can ask for that, which shows some clips of most of the videos in this workshop. I'm going to go to the workshop page and just show you what's in here. If you go to the main page in askSlim and click on workshops here, you can see cycle analysis workshop and 5 essentials. I'll show you the information on both of those right now. So if you click on Cycle Analysis Workshop, it's going to take you in here to the informational page. Now you can see that the regular price on this is $12.97, but you're going to pay nothing like that. It's just a great opportunity to learn so much, and you'll have more success as a trader if you learn this style. Well, we can't guarantee anything, but I believe that you will learn something that will be incredibly valuable to help build a sustainable career. But you'll get better at identifying trade entries and exits and stop taking those bigger losing trades than you do on your winning trades. You're going to end the confusion about technical analysis and really learn the true predictive level of charting. All of the information is right in here, and you can see there's a video here that you'll be able to play, and this will walk you through and explain the workshop to you. And you can also see on the bottom is what you get in each module here for this amazing workshop. This is just absolutely incredible, and you will be able to learn so much in here. And you will get email support from me if you take this for 30 days also, and just an unbelievable opportunity to learn this style of analysis in our cycle analysis workshop. But there is so much more to this, because we're also going to offer you, besides the cycle analysis workshop, the 5 essential building blocks to successful trading as a bonus. So this is going to cost you nothing additional. It's a 6-part workshop where I share lessons from my 48 years as a trader and over 2 decades as a coach and personal growth facilitator. It's not like any workshop you have ever experienced, and it's not a how-to on any particular method of trading. It's a comprehensive learning experience on the 5 most important aspects of successfully engaging in the financial markets. Get ready to look deep into your roadblocks to greater success. Let's go back to the askSlim website right over here, and back to workshops and to the 5 essential building blocks right there, and you'll be able to see information of what we're going to teach you when you take this. This is a 6-part workshop, and there will be an introduction there. And building block 1, defining a healthy role for trading in your life. Building block 2, building emotional fitness. Building block 3, balance and trading style, personality and risk tolerance, and so much more. Building block 4, to adopt 6 key areas of discipline in your trading. And building block 5, creating your own winning formula. Absolutely unbelievable. We are putting this as a bonus as you come and subscribe and invest actually in our amazing cycle analysis workshop, getting this special bonus, the 5 essential building blocks to successful trading. So this special, just incredible, 44% discount. This is $8.97. It was a value of $15.94 for both workshops. If you wanted to invest in something like this somewhere else, you would pay thousands, maybe 5,000 or more for the information you're going to get right in here. If you're a premium member at any level, you're going to save an extra $100, and that would only be $7.97. So if you're not a premium member, sign up. For our members, write to Matt at askSlim.com for that special link for $797. Or if you're brand new and just signed up, then write to Matt also for that link, $797. You're going to save an unbelievable 50% by doing that. Write Matt at askSlim.com, or go to the top of the askSlim page and click that Learn More button, and you'll be able to get all of the information that I just showed you and so much more. Make sure you watch that video in the cycle analysis workshop. This is a mind-boggling offer, and again, you learn to do our style of analysis and you will never look at charts the same way. That's it. Please do invest, and write Matt if you have any questions.